love to welcome you all to the AIF and PMS Conclave 3.0, India's premier gathering for alternative investment professionals, fund managers, HNIs, family offices and wealth advisors. I'll be your host for the day. Again, my name is Karunya Rao. So let's talk about the theme of today's function, today's conclave, India's economic rise from potential to global leadership. Could be easily a conference banner anywhere, and mean nothing really. But in this room, it means something very, very relevant and very, very specific. The capital being deployed by the people here, the decisions being made, the strategies being built, that is India's economic rise in real time. We've been hearing about India's potential for several years now. What's different now is that the potential conversation is finally giving way to a delivery conversation. And the people in this room are at the center of that shift. We have an extraordinary day planned for you ahead. 6 speakers, 2 panel discussions and some very well-deserved recognition for the legends who built the industry. So let's get straight to it. We are here to talk about opportunities in alternatives, and it's only fitting that we open with someone who has spent years making those opportunities real and accessible for investors across the country. Vikas Agarwal, the founder and CEO of Altport, a platform built to make alternative investments more accessible, more transparent, and more efficient for serious investors. Let's welcome Mr. Agarwal on stage to officially open the conclave with his thoughts on opportunities in alternatives. Ladies and gentlemen, please put your hands together for Vikas Agarwal.
So good morning everyone, can you hear me? Am I loud and clear? Yes. Okay. So, well, I have many people to thank. So let me first start with thanking all of you for taking the time out from your busy schedule. I see people have come from Ahmedabad, some people have come from Hyderabad. So I am really honored and grateful to all of you for taking the time out from your busy schedule and making it today. So let me start with my first company that I want to really thank is our media partner Money TV. Can we have a big round of applause for them? They've been doing fantastically well. The team is so passionate, especially Jigish Bhai and his team. The moment I reached out to them, they immediately agreed upon and said that you would be happy to cover this event. So I am really honored to the entire Money TV and their team. So, yeah, I think this is working. Okay.
All cameras का sound इसके अंदर है. All cameras का sound इसमें आ रहा है. हाँ.
Then I take this opportunity to thank all the speakers and panelists. Without their kind support and gracious presence, this event would have not been possible. So I would like to thank all of them. I also take this opportunity to appreciate and thank our supporting partner, which is Swayam Capital, Money TV, Axis Alternates, Motilal Oswal. I mean, without an Axis Alternates, without their commitment to investor education, this would have not been possible. So I want to really thank each one of them for supporting this event. Well, I have been given this topic that I want to talk about opportunities in alternates. So without any further ado, I'd like to start the presentation. So we talk about opportunities in alternates investments. So broadly, these are regulatory frameworks. You have AIFs, PMS, and the new category which has recently been introduced by the regulator, which is specialized investment fund. your SIF, and then GIFT City. So we're going to dwell upon that as well. So broadly, if you look at, let me start by sharing some data points with all of you. When you look at the size of the industry, the alternates is shaping up very fast in India. The total size of alternates, the AIF is now crossing beyond 10 lakh crores. So I remember when I started my career in mutual fund industry, and some of my bosses are sitting here. Mr. Nikhil Bagaria from Alchemy, I used to report into him. He taught me what is mutual fund during 2002, 3 times, and that was the time when I started the career. We took 25 long years to reach to around 10 lakh crores of the size initially. And AIF in no time has crossed 12 lakh crores, the total asset under management, as I speak to you. So this is nothing but clearly an indication that HNIs like yourself or some of the family offices sitting in this room are clearly migrating. I would not say completely migrating, but migrating from mutual fund to alternates, and we're going to talk about that as well. The PMS industry, some of you may be surprised to notice that the size is now close to 9 lakh crores, and this is, I'm talking about non-promoter, non-institutional money. When you look at EPFO mandate, that itself is, I think, more than 17, 18 odd lakh crores. SIF, as I said, recently introduced, the size is about 5,000 crores. Some of you would be surprised to notice that now as I talk to you, there are more than 100 SIS which are already been approved by the regulator, and this is shaping up very fast. And then you have GIFT City, where I don't know how many of you know that in GIFT City there are 351 funds which are already approved by the regulator, and this number used to be less than 100 as last year when we organized this AIF and PMS conclave. So what are the alternates? So alternate refers to asset classes outside traditional listed equities, bonds and cash, and equivalent of these kind of asset classes. So some numbers again here, I am going to give you some numbers. So when you look at private equities, there are 1800 AIFs which are approved by the regulator as I speak to you, out of which you have private equity, and that number itself is about 850. So you have 850 between Cat 1 and 2 that I am referring to, private equity funds which are up and running, and maybe some of them owned by the family offices, some of them are owned by the asset management companies. Then we have private credit fund. Private credit number has reached to more than 1,15,000 crores. That's the number, and there's a clear-cut shift amongst the investor community from fixed income mutual funds to private credit funds, thanks to the income tax department, in the sense that ever since this indexation benefit going away from fixed income products, people are sort of migrating from these fixed income mutual funds to private credit funds. So these are some numbers that broadly I picked up. I thought of sharing it with you. Now there is a paradigm shift here. So this is changing. This is a complete change in the landscape, where there has been a lot of volatility, especially in the last 18 months that we have witnessed in India in terms of listed equities, and therefore the investor community who missed out the complete decade in terms of having exposure in private equity. For example, as a wealth manager, when I talk to my clients, I don't come across clients who say that, look, I have made 60 times money in Anand Rathi before it got listed. Or I don't come to a client who says that, look, I have made 100 times of my money when I have invested in Paytm or these businesses before they got listed. But then this is where US used to be, so I always say that life में चीजें दो बार होती है, एक बार US में और एक बार India में. So this trend is clearly indicating that this ecosystem of startup, which is shaping up under our Honorable Prime Minister Mr. Narendra Modi, this is where US used to be during 1985-86, when their size of the economy used to be $4.5 trillion. And that was the time when these ecosystems started shaping up. And therefore, these FIIs and FPIs or some of the foreign investors had more confidence in unlisted stories of India than we as an Indian investors, and therefore between 2010 to 20 we missed out completely. But now that we are witnessing as a wealth management boutique outfit, we are witnessing huge inflow coming into CAT2, especially a lot of interest is coming in. The other thing is growing higher global geopolitical risk. So that is one of the reasons that people want to come at an early stage of the growth curve of these businesses and want to participate in these businesses through CAT1 and CAT2. And I have a lot of speakers lined up today who want to talk about that as well. The other thing is why alternative matters in 2026. Of course, the return premium. Well, I'm not going to give you any promises here, so we'll have a one-on-one conversation. But clearly, private market clearly offers good opportunities. The risk diversification, the growth opportunities, and the other one is capital expansion. Essentially, what I'm trying to explain here is that entire India is now divided in two parts. One part is you have more than 5,000 companies which are listed on the main board. On the other side, you have SME platform which is shaping up very well, where you have more than 200 to 300 companies getting listed year on year. And then you have private companies which are in the verge of getting listed. So this is clearly a new India versus old India, where depending upon the risk appetite of the investor, we suggest them to take exposure. I'm not going to take too much of time, but clearly for those who are attending these sort of sessions for the first time, let me just take you through quickly few data points here again. So category 1 essentially invests in startups. AIF category 2 essentially invests in private equity or private credit funds. And then you have in category 3, which is long only or long short. Well, in India, long short somehow could not scale up to the extent what it is in the global economies like US. I would not blame the investor community. I think we as an industry, we as an asset management company needs to build more efforts. We need to put more efforts in terms of improving the overall performance of the funds. And also develop the talent who understand long short, because and through SIF, I think to large extent this is achievable. Want to talk about the advantage of AIF. So clearly diversification, low correlation. When I say low correlation, in the sense that when markets are going through, for example, now that US is kind of planning to attack on Iran, and you see markets are going down. But if you have invested in say companies which are not listed, you may not have a direct correlation, and as a result of that you may not have that kind of impact in your portfolio. Higher returns in the sense that because these companies are small in size, therefore their what we have seen is that their growth numbers looks to be more than 25-30%. And there is a saying that you make as much money in the stock market as company makes. So your markets are nothing but slaves of the earnings. So clearly, if they are growing at 30% year on year, obviously you have potential to grow your assets to the similar numbers. It helps you reduce your volatility, manage the longevity, and in the fixed income portion, you have a reliable income stream. I don't know how many of you know that in private credit funds, the average yield that you get is about 1% month on month. And there are funds, and I'm talking about the SEBI approved numbers here, have sort of built the track record of giving 1%, close to 1% yield month on month, crediting in client's account. So that's a big achievement. For those who are investing in category 1, 2 and 3, this is the time frame that we want to talk about. The IF industry, I already covered these numbers, so not going to take too much of time. But the other thing I want to tell you is that when I say PMS is also shaping up big time. The other day when I was looking at the data, some of you would be surprised to notice that now, as I talk to you, there are 1250 PMS schemes which are approved by the regulator. They are up and running by various asset management companies. And what we are witnessing is a strong HNI and ultra HNI family participation. Well, we always get into this debate of mutual fund versus AIF versus PMS, and these numbers are clearly indicating that that it's not about debating, that it's not about mutual fund versus PMS versus AIF. It is about AIF and PMS and mutual fund, depending upon your risk appetite. So in PMS, broadly 75-80% of these schemes are discretionary. When I say discretionary, in the sense that discretion lies with the fund manager to decide which stock to buy, when to buy, when to sell. And they are all professional management companies, have built that expertise of managing clients' money through professional management. So there are two ways of doing it. Either if you think that you can have your own professional setup, you can go about doing it on your own and do your own research. You don't need a PMS manager or AIF manager or a wealth manager like us. But if you think that you don't have time and you are involved in your own business and you need a professional expertise, then I think PMS is the best thing, where you essentially give nothing but a mandate to the portfolio manager, a sort of power of attorney to the portfolio manager, that hey, look, you manage my funds because you have more expertise than me. GIFT City I already covered, so there are broadly two categories in GIFT City which is emerging very well. So inbound and outbound categories. So inbound is something where a lot of NRIs, and I don't know how many of you know that there is a paper and study which suggests that NRIs are our brothers and sisters who have gone abroad and working out there. The total net worth they have managed to accumulate is as good as the size of our economy, which is about $4.2 trillion. That's the kind of net worth they have built. And there was a time, I still remember, when I used to work for Motilal Oswal and used to go attend Berkshire Hathaway's AGM. Used to find, first of all, very rare Indians, number of Indians, A, and B, nobody used to talk about India, and third thing, they used to say that nobody is taking any kind of reforms. But now clearly these NRIs, they want to come back in India, participate, and this is where GIFT City is shaping up big time. I already talked about the number of schemes. There are 350 GIFT City funds which are there in the system, and month on month I see that 25-30 approvals coming from the regulator. This also indicates the commitment that we want our NRI brothers and sisters to come, participate in Indian capital markets, invest back in their own home country, and enjoy the highest possible returns, because India happens to be one of the fastest growing, or I would say the only fastest growing engine for the globe. The other thing is specialized investment fund. This is now picking up. I would give at least a year for these funds to settle down, because overall, as I said, that on the long short side, our experience on the alternate AIF side is not so great. So therefore, we are not advising any of our client to lay their hands down in this fund at the moment. But we are continuously evaluating and monitoring it. And as and when we feel comfortable, you can be rest assured that my team will reach out to you and share those data points with you. The other thing is, we've also onboarded some of the international funds on our platform, and I see that as an investor, if you have say 100 rupees, we suggest that you should have at least 15 to 20 rupees invested across the globe, and therefore it requires 15-20% of your allocation towards international funds. And these things have become more accessible, more easy now. We've identified globally there are 1350 good quality portfolio managers who exist. Like the way we cover entire AIF PMS universe in India, similarly we are putting up our efforts in terms of listing down these global fund managers, and all of doing our own due diligence in terms of understanding their performance. We've already onboarded about 13 to 15 portfolio managers there. This is the interesting data. This clearly indicates that the numbers of HNIs in the alternates are, especially in AIF, the numbers are increasing and shaping up big time. So more and more HNIs are now participating in capital markets through AIFs. These are three different vehicles that you can think about it. This is another thing, another data which is global investor allocation. There we see that especially the ultra HNIs, the numbers are on the listed equities are coming down to the tune of 31%, and the HNI and the alternates, it has gone up to 50%. So that's another number that clearly indicates that even globally people are more keen and involved towards alternates. Alternates actually started shaping up from 2008 onwards from US, and then we saw that the post Lehman Brothers crisis, this trend started picking up. This another number clearly indicates that how people have shown a lot of interest in these two vehicles, more particularly AIFs. This is a slightly old data, but I picked up this from Client Associate. They are happens to be our competitor in the wealth management, but doing fantastic work on the private equity and family office side. There I saw that some numbers are that some of the HNIs who have increased their allocation from 20% to 30% in alternates have ended up getting much higher yields vis-a-vis other vehicles. So coming back to Altport, so Alt is your alternate, Port is your portfolio management services. So we are emerging as one of the largest platform in India for investing in alternates. And I talked about these 3,500 funds, close to 1,800 AIFs, 1,250 PMS, 100 SIFs, international fund. All of them you can visit our site altportfunds.com and do complete your analysis in terms of returns, etc. So we are a process-driven organization. When I laid down the foundation of this organization in 2020, the first thing was there in my mind is to build an advisory research-based approach, and this is very important when you are managing public money. And we thought of putting more efforts towards this. This is our framework through which we evaluate the portfolio manager, because the question is, when you have 1,800 funds on AIF and 1,250 PMSs, how do you say no to 99% and work with only top 5, 6, 7 fund managers in India, or don't go beyond 10, 15 numbers all put together? It requires a lot of efforts, and therefore we built our own framework called investment framework, where we look at the investment style of the portfolio manager. And there are times when people say that, look, I am a value investor, but they end up investing in growth stocks. So our job is to really check and do the complete due diligence and see whether they are sticking to the style during the bad times or not. That's very, very essential. The other thing that we look at is the investment quality. So when I say quality, it is very subjective. So therefore we try, because we come from research background, we try and evaluate the entire portfolio to an extent of going and checking how many stocks have been bought and sold since inception, and it will give you some idea whether the portfolio manager is running a high conviction idea what he is supposed to be, or only buying and selling based on the advice coming from the broker side, buy side of the desk. The other thing is investment performance. Well, the way we look at is a consistent performance. So we don't want Q1 all the time. We don't want Q4 as well. But if somebody is at Q2 and consistently delivering Q2 returns, we would prefer to work with them where we don't have too many accidents taking place. This is a sole framework where one of the things that I learned from my stakeholder, they are sitting here, is that when you have high skill and high luck, that's the best position, because there are times we see that some of the portfolios starts doing very well, and then you realize when you do the analysis, you realize that because of the markets they've done well, but not because of the skill. So this is very important for us, that we don't want to get into any kind of trap, and because we are basically, our framework is a manager centric framework, we prefer to stick to the fund management style, because ultimately we're betting on the jockey and not on the horse. So with that, I would like to conclude my presentation, and once again take this opportunity to thank all of you for taking the time out from your busy schedule and giving me your patient hearing. Thank you.
Thank you so much once again to Mr. Vikas Agarwal for the powerful start for the day. Give it up once again, guys.